The average American believes they need $270,000 annually to feel financially comfortable. Yet, in 2024, the average worker earned only $67,000 per year, less than one-third of the perceived comfort level. This stark gap has left 72% of Americans feeling financially insecure. Even more concerning, over a quarter of Americans think they will never achieve financial security. This isn't just about numbers. Rising costs, stagnant wages, and mounting anxiety about the future have created a perfect storm, making it harder than ever to feel financially stable. So, how did it come to this? And what steps can we take to change our financial reality? The rising cost of living. Housing, food, healthcare, and education, four of life's biggest expenses, have all seen dramatic price hikes over the years. Yet wages haven't kept pace. For example, the median monthly rent in the U.S. was $2,029 in mid-2023. That's 46% of the median pre-tax income, far above the recommended 30%. Homeownership isn't any easier. The median monthly mortgage payment of $1,957 exceeds what many can afford. For millions of Americans, the cost of basic necessities now consumes over 75% of their take-home pay, leaving little room for savings or discretionary spending. The role of debt in financial insecurity. Debt is another major factor holding Americans back. In 2023, the average American carried a total debt balance of $96,371, including credit cards, auto loans, and mortgages. More than a third of Americans had more credit card debt than emergency savings, and 22% had no savings at all. This cycle of borrowing to cover everyday expenses, combined with rising interest rates, traps many in a financial loop. For instance, in 2023, average credit card interest rates reached 20.5% or higher, making it increasingly difficult to pay off balances. The erosion of the American dream. It wasn't always this way. Decades ago, a high school diploma and a steady job were enough to secure a middle-class lifestyle. Today, the path is far more difficult. Homeownership, once a cornerstone of the American dream, now feels unattainable for many. 77% of U.S. households can't afford a median-price house, making them feel hopeless about ever buying a home. Student loan debt has reached an all-time high of $1.77 trillion, delaying milestones like buying a home or starting a family. In many states, even a six-figure salary, a traditional marker of success, is no longer enough to achieve financial stability. In high-cost states like California, Hawaii, and Massachusetts, families need $240,000 or more annually to afford a middle-class lifestyle. Inflation and rising interest rates. Inflation has eroded purchasing power, while the Federal Reserve's 11 interest rate hikes since 2022 have further strained budgets. For example, the monthly mortgage payment on a $375,000 home has increased by $1,400 compared to 2 years ago, simply due to rising interest rates. Higher interest rates also make everyday purchases more expensive, from cars to credit cards. Budgeting. The key to taking control. Despite these challenges, budgeting remains a powerful tool for regaining financial stability. Experts recommend following the 50-30-20 rule. 50% of your income for essentials like housing, food, and healthcare. 30% for discretionary spending. 20% for savings or paying off debt. However, for many Americans, the reality is far from this ideal. Essentials alone often consume 75% or more of their income, leaving little room for savings or wants. The importance of emergency savings. Emergency savings are a critical safety net, yet more than half of Americans don't have 3 months of expenses saved. In fact, 22% have no savings at all. Without this cushion, even minor financial shocks, like a car repair or medical bill, can derail a household's stability. Building even a small emergency fund can provide peace of mind. While the goal of saving 3 months' income may seem daunting, starting with smaller, consistent contributions can make a significant difference over time. Breaking the cycle of financial anxiety. Financial insecurity affects more than just bank accounts. It impacts mental health, relationships, and overall well-being. Many people feel trapped in a cycle of stress, constantly reacting to financial challenges rather than proactively managing their money. But change is possible. The first step is setting clear financial goals. Whether it's saving for retirement, paying off debt, or buying a home, Having a vision for the future helps guide your spending and saving decisions. The role of public policy and employers. While individual effort is essential, systemic changes are also needed to improve financial security. Public policies that support affordable housing, healthcare, and education can help ease financial burdens. Employers can play a significant role by offering benefits like retirement plans, emergency savings programs, and affordable insurance options. Social Security, for example, has been a cornerstone of retirement security for decades. Ensuring its long-term sustainability is crucial for future generations. The path forward. Financial security may feel out of reach for many, but it's important to remember that you're not alone, and it's not your fault. Rising costs, stagnant wages, and systemic challenges have created barriers that require both personal effort and broader societal change. Start by focusing on what you can control. Create a budget that aligns with your goals. Build an emergency fund, even if it starts small. Seek out resources and support to manage debt and save for the future. Achieving financial stability isn't easy, but with the right strategies and a clear plan, it's possible to take back control of your finances and your life. Consider subscribing to Wealthy Globe and let's walk together on the path of financial stability.